You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. Great talking with you.
So, a little tiny country in Europe, Greece, still dominating talks. A friend just said, didn't we start talking about Greece in about 2011? And we did. And they're still there. What's going to happen if they don't make these payments?
Well, I think Greece will go the same way Cyprus did last year. And we're doing this interview towards the close on Friday, and I mean, all the news is that they failed to come to an agreement. Today was actually going to be the deadline, but the IMF and the European Union have given them an ultimatum, the people of Greece. They're giving them till tomorrow, I think 2 p.m. European time, but the ultimatum is accept their terms or be wiped out. And what their terms are to simply extend the bailout another 6 months. Now, back in 2011, when Greece really first started to get into the news in the United States, our stock market got hit in that summer for a short period of time, and people thought Greece was going to default, but they put together a bailout and the Greek stock market actually took off and did really well in 2012, and it seemed as if maybe the bailout was going to fix things or so and so forth. But by the end of last year, it became clear that wasn't really the case, and it simply was just a Band-Aid on a very difficult situation. So the people of Greece, they elected these leftist people sort of in desperation. And these leftists in Greece have tried to get the IMF and the creditors of Europe to come to a new deal that would work, that would actually enable their economy to grow and for them to pay off at least some of the debt. No one ever believed they could ever pay it all off. But they're trying to do something that would work or move in that direction. And the Europeans are just adamant that they don't want to bend at all, it seems. And it's almost as if they know in the long run that Greece will never be able to recover. And they're just trying to extend the bailouts so they can milk more money out of the country. And it's we'll see if the people of Greece are going to accept that ultimatum or not. But in hindsight, the past couple of years, since 2011 and 12, have just been a waste for that country because nothing there has improved. The unemployment is still over 20%, and all the IMF stuff, in some ways, has made things worse. What they want to do now with this new bailout ultimatum is force them to raise their taxes on basically the VAT tax, which is for food and hotels, by 50%. So they just want to milk the people there and give that money to these bank people that have the loans and just know it all to be destroyed. So they're going to do that. Are they going to let them do that and just blow themselves up in a couple of years, or just blow themselves up this weekend? I guess that's what we're going to see. But the thing, though, from an investment standpoint, is that the Greek stock market has fallen so much that it's as cheap as the United States stock market was at the bottom of the Great Depression. So I do think at some point there will be an investment opportunity in Greece. In fact, I bought Greek stocks in 2012 and about doubled my money in them, and I think something similar and a similar opportunity will be had here. And if you recall, we were talking several months ago about Russia, and Russia had a stock market collapse and a currency drop, and it actually bottomed out then, and it's done really well since then. So when these crises happen, they actually end up, for investors who are able to do it, to be good investment opportunities. So I actually think, if the news in the place blows up this weekend, following that, it could be a good investment opportunity. If you look at Cyprus last year, they defaulted and they had to nationalize a lot of their banks, and the stock market there actually fell into all that, like 95%, and has since been going sideways. So it's eventually going to turn up and break out. And I think, the Greek stock market may not go up immediately following whatever happens this weekend, but I do think in time it will.
Now, I was wondering if Greece defaults and falls out of the European Union and goes back to the drachma, that gives them a chance to actually manipulate currency to the point where they can attract new business. Plus, if they fall out of Europe, wouldn't that make the euro fall in value and actually help everybody sell their products elsewhere?
Yeah, I actually, at this point, I think you're right. I think that really makes the most sense for them to do. Just get this over with. And I mean, the bad part will be, if they go on this drachma. And I'm not clear if that would mean they'll be, out of the European Union or still in it. There's talk that they may have a dual currency system, but whatever the case, if they go on the drachma, that's going to mean huge inflation in Greece. That currency will just, go to nothing because they'll print away their debts. But following that, it'll be bottomed out. Not just their stock market, but their economy. This isn't a unique situation. We have seen this in many other countries, the past 20, 30 years. One it's happened to multiple times is Argentina. If you can remember back in 2000, that's exactly what happened there. They defaulted and they were on the U.S. dollar. They had their currency pegged to the U.S. dollar, and they took the peg away and just inflated the debt away. And within a few years, their economy had turned around and their stock market did well too. Now they got in the same situation again. They just can't seem to stop spending money over there. But it is a solution to these things.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from Wall Street Window. Mike, how are commodity stocks doing?
Well, they're really worth keeping an eye on because, right now we saw oil stocks, they fell really bad last year, and I'm still not really bullish on them yet. Gold stocks, I think they're building a long base, and they'll eventually break out of that to the upside. Gold is basically trading between 1170 or so and 1200, and once it goes through, let's say 1210, it'll be in a new bull market. It's just in this trading range here, and I think that's a real opportunity to make money because very few people are in it anymore. In fact, according to last week's Commitment of Traders report, the commercials are only net short about 71,000 contracts, and small investors have roughly 1,000 in the futures market. It's basically nothing. In 2012, they had 50,000. And when no one is in, that's how you get to the start of a bull market, because bull markets are driven by buying, and more people coming into the market and buying. So when you have a market where no one is in it, that's that's a good opportunity from an investment standpoint for the next couple of years. And what's neat about the commodity complex is it's not just gold that's in this situation, but commodities across the board. In particular, agriculture commodities, nothing like coffee and sugar and corn and soybeans and so forth. Those commodities also had a bit of a decline over the past couple of years, and so far this year they're as a whole going sideways in a base. And actually today there's two commodity ETFs. There's RJA, which is a Jim Rogers commodity ETF, and then another one, DBA is the symbol, and both of them are actually breaking out of basis today. And actually, and the DBA one for disclosure purposes there. But one of the things that's interesting about these commodities is that inside the futures market, on just about all of them, except oil, that is, but with these agriculture ones, there's very, very tiny short positions among the commercial traders. And it's the same thing like I was saying about gold. And the reason why this is so important is they're the manufacturers of these commodities, the farmers, the people who ship them. And they don't go into the futures market to gamble or try to trade on price movements, but they use the market to hedge and lock in prices they already have. So when they take those hedges off by reducing their short positions, that means that they think the prices are going to go up, or they're not going to, at the very least, they're not going to decline anymore. So just about across the board of agriculture, they're either got almost zero net short position, and some of them they're even net long. In the coffee market, for example, they have a big net long position. So the commercials, the producers, the people who know much more than I do about any of these commodities, they're bullish. They're in some cases even long, and I pay attention to that, and I'm going to invest with them, and I think that's going to be a good investment in the next couple of years. Now, oil, the commercials still have a very large short position. Last year, there was a record short position built in the commercials market around this time last year, right before oil dropped, right before the oil stocks took a dive, and as of last week, they've only really gotten out of half of that position. That tells me that the oil market isn't ready to go up yet into a new bull market. It still has maybe the rest of the year or a full 12 months before that'll happen. And the culprit, I think, is Saudi Arabia, because when the oil prices started to fall, they talked like they wanted the prices to drop. They said they were going to increase production, and they specifically said that they were going to do this to harm American oil fracking companies, and they wanted to see a lot of them go out of business. And it's going to, and I think that's their goal, and that's just, I can't stop them from doing that. And our government doesn't seem to care about it, and that's just the way it is. And I don't like seeing American oil companies get hurt. I don't like seeing Americans lose their job just because these Saudi people over there want to hurt us, but they're doing it, and all we can do is understand that and eventually, wait and be patient and take advantage of it by buying into energy. But right now, immediately, we have these other opportunities of gold, silver, and other commodities, too.
Mike, thanks a lot for chatting with us, and have a great July 4th long weekend.
You too.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.